we'll delve into 2 top stocks to consider buying for under $1,000 right now. Stick around until the end because we have a special tip that could help you maximize your investment returns. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. Bull markets come and go, inevitably giving way to bear markets and then making a comeback. The stock market has an impressive tendency to rise steadily over time. For investors who stay committed through market highs and lows and consistently invest in solid businesses, it's possible to compound returns over time into a profitable and expansive portfolio. First up on our list is Dexcom, ticker DXCM, a leader in diabetes care. Dexcom might not have kept pace with the broader market this year, but the company is in excellent shape. One reason for its recent stock dip, similar to other diabetes care companies, is investor concern over the growing popularity of treatments like glucagon-like peptide-1, GLP-1, agonist medications. However, this fluctuation may stem from a fundamental misunderstanding of diabetes treatment options. While GLP-1 medications have shown success in helping both type 1 and type 2 diabetics manage their blood sugar levels, continuous glucose monitoring CGM devices, like those made by Dexcom, play a crucial and complementary role. CGMs provide real-time, detailed insights into a patient's blood sugar levels, enabling them to make informed healthcare and nutritional decisions. One method of diabetes care does not replace the other, and CGMs have wide-ranging applications not only for type 1 and type 2 diabetes patients, but also for those with prediabetes. Dexcom was founded in 1999 and is headquartered in San Diego, California. The company's mission is to empower people to take control of diabetes through innovative, continuous glucose monitoring. Over the years, Dexcom has become a leader in the CGM market, renowned for its technological advancements and commitment to improving patient care. Dexcom controls roughly 40% of the CGM market. The latest generation of their flagship device, the G7 CGM, was launched in 2022. The G7 is Dexcom's fastest and smallest sensor, featuring a warm-up time of just 30 minutes. It is also the most widely covered CGM in the market, thanks to Dexcom's extensive partnerships with healthcare payers. The G7 connects directly to the Apple Watch for users in the US, Ireland, and the UK, with integrations in other countries expected soon. In addition, Dexcom achieved a significant milestone with regulatory approval for the first glucose biosensor in the US that does not require a prescription. The Stelo CGM is approved specifically for patients with type 2 diabetes who are not on insulin therapy. This is Dexcom's first product for diabetics who aren't using insulin, representing a significant penetration into a broad segment of its total addressable market. It's estimated that the Stelo CGM could benefit up to 25 million people in the US alone, and over-the-counter access removes another barrier for patients. Keep in mind, around 70% of type 2 diabetics do not require insulin therapy. Dexcom is a profitable business with steadily growing revenue from its portfolio of market-leading products. In the first quarter of 2024, the company reported revenue of $921 million, up 24% year-over-year, while net income soared by 200% to $146 million. For investors seeking a resilient healthcare growth stock, Dexcom is a compelling option worth serious consideration. To understand Dexcom's position better, let's look at its key competitors. Abbott Laboratories and Medtronic are significant players in the CGM market, but Dexcom has managed to carve out a substantial market share due to its technological innovations and strong customer base. Dexcom's focus on user-friendly devices and integration with popular consumer electronics like the Apple Watch has given it a competitive edge. Moreover, the company's strategic partnerships with healthcare providers and insurance companies have ensured that its devices are accessible to a broad audience. Dexcom's research and development efforts are also noteworthy. The company continually invests in improving its CGM technology, making it more accurate, reliable, and user-friendly. This commitment to innovation has helped Dexcom maintain its leadership position in the market. Additionally, Dexcom's customer service and support are highly rated, which is crucial for users who rely on CGMs to manage their health. But before we proceed, here's a question for you. What do you think drives the stock market more, company performance or investor sentiment? Drop your thoughts in the comments below. Next on our list is Gartner, ticker IT, a titan in research and consulting. Gartner is renowned for its research and consulting services, working with businesses across 90 countries. The company's Magic Quadrant report has become an industry standard for businesses in the tech space to evaluate competitors and strategize their growth. Gartner was founded in 1979 by Gideon Gartner and is headquartered in Stamford, Connecticut. The company initially started as a private research firm and has since grown into a global leader in providing research and advisory services to various industries. Gartner's mission is to provide unbiased and insightful research that helps organizations make informed business decisions. Gartner generates revenue through several streams. Its largest and fastest-growing segment is research, which is subscription-based. Most contracts are at least 12 months long, with roughly 70% being multi-year, providing the company with predictable predictable recurring revenue. This segment delivers research content and data-driven analysis that organizations worldwide use to align their business vision and optimize operations. Gartner's second revenue stream comes from the conferences it hosts for information technology and business executives. These conferences are renowned for their high-quality content and networking opportunities, attracting professionals from around the world. Additionally, Gartner provides consulting services to chief information officers and other senior executives at various companies, offering tailored advice to help them navigate complex business challenges. To illustrate the breakdown of Gartner's revenue sources, in 2023, the company reported just under $6 billion in total revenue, an 8% increase compared to 2022. Of this total, about $4.9 billion came from its subscription-based research segment, $505.2 million from conference revenue, and $514.7 million from consulting revenue. Gartner is also a profitable company. In 2023, it reported a net income of approximately $883 million, up 9% from the previous year. In the first quarter of 2024, Gartner brought in profits of $211 million on revenue of about $1.5 billion, a 5% increase from the same period last year. Despite a year-over-year decline in net income, Gartner consistently generates positive cash flow. In the first quarter of 2024, the company reported an operating cash flow of $189 million and a free cash flow of $166 million, both up 15% and 16% year-over-year, respectively. Gartner's leadership in technological research and consulting has given it a significant footprint in a vast, addressable market estimated at around $200 billion. With shares up about 30% from a year ago, now might be a good time for investors to take a closer look before they potentially climb higher. Gartner offers a variety of services to its clients. These include IT research and analysis, benchmarks, and peer networking services through its Gartner for IT Leaders and Gartner for CIOs memberships. The company also provides consulting services, which deliver tailored advice to meet the specific needs of individual organizations. Furthermore, Gartner hosts over 60 conferences annually, covering various sectors and industries, providing platforms for networking and learning from experts. One of Gartner's key products is the Magic Quadrant, which provides a graphical representation of a market's direction, maturity, and participants. This report is widely used by companies to understand the competitive landscape and to plan their strategies accordingly. The Magic Quadrant evaluates companies based on their completeness of vision and ability to execute, categorizing them into leaders, challengers, visionaries, and niche players. Gartner's extensive database and resources provide businesses with critical insights that are not easily available elsewhere. This competitive advantage has allowed Gartner to build long-term relationships with its clients, who rely on the company's research to make informed decisions about technology investments and business strategies. Gartner's influence is such that many companies' strategic plans are heavily influenced by Gartner's research and recommendations. Furthermore, Gartner's conferences are not just about passive learning. They offer interactive sessions, workshops, and opportunities for one-on-one consultations with experts. These events are highly valued by participants for the practical insights and networking opportunities they provide. This aspect of Gartner's business model not only generates significant revenue, but also strengthens its brand as a thought leader in the tech industry. As illustrated in the table, both Dexcom and Gartner exhibit robust financial health and growth potential. Dexcom's revenue for 2023 stood at $3.23 billion, with a substantial increase to $921 million in the first quarter of 2024, reflecting a 24% year-over-year growth. This growth is complemented by a remarkable 200% increase in net income for the first quarter of 2024, amounting to $146 million, highlighting its strong profitability. Dexcom's significant 40% market share in the continuous glucose monitoring (CGM) sector further solidifies its leadership position. On the other hand, Gartner generated an impressive $6 billion in revenue for 2023, with first quarter 2024 revenue reaching $1.5 billion, an 8% year-over-year growth. Despite a decline in net income by 28.82%, Gartner remains a dominant force in the research and consulting industry, with diverse revenue streams from its subscription-based research, conferences, and consulting services. These metrics underscore the promising growth trajectories and strategic advantages of both companies, making them worthy considerations for your investment portfolio. The bigger picture of both Dexcom and Gartner, excellent examples of companies that provide valuable services and have strong growth potential. Dexcom's innovations in diabetes care offer essential tools for millions of patients, while Gartner's comprehensive research and consulting services help businesses navigate complex market landscapes. Investing in these companies under $1,000 each could be a strategic move for your portfolio. However, it's essential to conduct thorough research and consider your investment goals and risk tolerance before making any financial financial decisions. Diversifying your portfolio and investing in companies with strong fundamentals can help mitigate risks and maximize returns over the long term. That's all for today's video. If you enjoyed this content and found it valuable, please like the video and subscribe to our channel for more weekly updates. And before we go, here's a question to ponder. If you had $1,000 to invest in any stock right now, which one would it be and why? Let us know in the comments below. Remember, this video is for informational purposes only and is not financial advice. Always do your own research or consult with a financial advisor before making investment decisions. And as promised, here's the special tip. Consider setting up automatic investments to consistently build your portfolio without the stress of timing the market. Thanks for watching, and we'll see you in the next video on simple investing secrets.